Hi everyone, this is Michael Kramer of Mach Capital. Today is Tuesday, May 20th. It's around 4:30 New York time. So we're entering a really quiet period for the economic calendar, at least. When we look at Wednesday, there's really nothing happening. Thursday, we get a couple of data points with initial jobless claims, and then of course the S&P Global PMI numbers will be coming out at 9:45 a.m. Existing home sales Friday. New home sales, that's about it. And even next week is a pretty light week, with really the highlight being GDP revisions and then PCE numbers for the month of April. So outside of that, there's just not much happening in the marketplace currently from an economic data standpoint. And basically the only real headline risk is what's happening around trade wars and trade tensions and deals being done or not done. And so, when we just break into the marketplace, what we're seeing is after a little bit of a pullback, we're starting to see the euro begin to move higher again. This is your 10-day exponential moving average, and now at least the last 2 days, you've firmly moved back above it. We are sitting just also at the 20-day moving average. I did draw on a little bit of a trend line here. So right now we're trying to get through this little bit of resistance, and it looks like if that happens, which I think it probably will, you could see the euro move back up towards this 114 range and potentially even move higher than that. One reason why I'm thinking that's possible is that if we look at this move here, we retrace just 61.8% of the entire move. And generally speaking, in my experience, when you see these type of moves, once you see the 61.8% retracement and you begin to move up again, that generally leads to an extension and a move above the previous high. Clearly, if this doesn't hold, then we're probably looking at maybe a break back down towards 109, but I think those odds are diminishing. When we look at the pound, that also looks like it's getting ready to break out to the upside. Also now firmly above the 10-day exponential moving average, well above the 20-day moving average. And really, there's not much stopping us from going through this 134 area. In fact, after we get through 134, you could probably see the pound move all the way up towards 137 or so. Again, I think it's most likely that you're going to see the pound continue to strengthen. And I mean, the downside risk here is 132.5. And if that level breaks, then you're talking about moving back down towards 130, 170 or so. But the momentum and everything looks pretty strong to the upside at this point. When we look at the Japanese yen, that also looks like it's about to continue to strengthen versus the dollar. In fact, here's your 10-day exponential. You're below that. It also looks like there's a little bit of this rising megaphone pattern in place. And kind of almost make a case as some sort of pennant or flag pattern as well. If we break this uptrend around 144.5, I think that's going to set up for a retest of the lows at around 140.5. And so, again, like at this point, it just looks like we could be seeing the dollar weakening across a bunch of different currency pairs. Your 20-day moving average right now is acting as support. But again, given some of the things that are happening around the world, it just seems like the dollar weakness is likely to start to continue again. When we move over to gold, clearly a weaker dollar is going to benefit gold and potentially push it higher. Last we spoke, we thought maybe there was a double top pattern forming here. That clearly now has been broken. So here was the neckline. We broke below the neckline, and now we've come back above the neckline. And when that happens, this typically works as a continuation pattern. Right now, we're still seeing momentum going lower. But if we draw this arrow a little bit better and we line it up a little bit better, you can see we're right on the cusp of reversing momentum and having it move higher. I mean, at this point, it looks like maybe gold's going to head back towards the highs in here at around 3,400. I mean, right now, the 20-day moving average is there, but still hard to argue against the bullish case for gold, given that it survived this double top pattern. And we're now back above the neckline, and it looks like momentum is shifting there. There's not much to say about oil other than the fact that it got to the 20-day and the 10-day moving averages, and that continues to hold as support. We've talked plenty in the past about how important the $66 level is. It also looks like at the moment we're seeing a little bit of resistance around 63.70. It's possible here that oil is just consolidating. It's really hard to look at this and get a very good feel for it. But I guess if you want to, you can try to make an argument that maybe oil is setting something up. Clearly, it would need to complete and come back down a little before maybe moving back up. I just think it's going to be very difficult for oil to breach 66 just because of what an important level it's been in the past. So I think right now oil is probably somewhat limited to somewhere between 63, 64, and maybe your downside is somewhere at around 60 or 61 right now, and a break of 60 sets up a return to the lows at around 56. The DAX just continues to move up, and you can see the 10-day exponential moving average just continues to support it. The upper Bollinger Band still has plenty of room. We are getting a little bit bought on the RSI, but that being said, there's not really much not to like about this chart at this point, and would maybe even suggest we move up towards this upper Bollinger Band. I guess if you want to try to look for clues in terms of what's happening here, you can try to draw, some shapes out, try to figure out if there is something going on. Right now, I really just don't see anything of any significance. It's possible that we're forming some sort of rising megaphone pattern, but it's really kind of premature for that. Right now, the trend is still higher. I think there's really good support in this chart at around 24,000 if you just kind of look at the two tops here, and that acted as support already and it acted as resistance. So right now, as long as you stay above 24,000 and you stay above the 10-day exponential moving average, more importantly, I think the DAX probably continues to move higher and head towards this upper Bollinger Band. When you look at the FTSE, that is actually now getting to a point where we would probably think that the FTSE may be due for some sort of consolidation. We are trading above the upper Bollinger Band at the moment, but we're still a little bit below 70 on the RSI. So there could still be a little bit further for this to go. But this has also been an important area of resistance. And so we're just going to have to continue to see how this plays out. It looks like we did break above this important resistance area right in here at around 87.60. So as long as the trend continues, I think what we're probably looking at is a period where maybe the FTSE just consolidates a little bit, this 8,800 area perhaps, before it makes another attempt to go higher. The one thing that is a little bit concerning is that you've seen the correlation with the FTSE and copper prices actually begin to break down a little bit. So either copper is going to have to turn higher, or it's telling us that the move we've seen in the FTSE to this point has been false, or the relationship is just breaking down. I think it's too early to say that the relationship is breaking down. It's been a pretty long-standing relationship. At least it goes back to 2020. And so we probably don't want to dismiss it, and we probably just want to remain vigilant of where copper is. The NASDAQ 100 has really kind of started to show some signs of slowing down a little bit here. We'll have to keep an eye on. I mean, this is there's not really much going on this chart at this point. Here's your 10-day exponential moving average. That certainly favors further upside. Here's your upper Bollinger Band. That also suggests that there could be some further room to go. The NASDAQ is a little bit overbought on the RSI at 70. And so what we're kind of looking at here is a scenario where we've seen some consolidation around this 21,000 to 21,500 region. And now we're just waiting to see if we can break out or not. Clearly, if we get above this 21,500 area, that's likely to result in the NASDAQ climbing to back to the highs at about 22,100. And if we were to see the NASDAQ fall below this 21,160 level, I think it probably leads to filling of this gap at 20,100. When we look at the S&P 500, this is a little chart I have drawn up here with the importance of OPEX. And so last Friday we had an option expiration date, and you can see in the past that after option expiration we've tended to see changes in trend. Going into February OPEX, we were trending higher, then we reversed lower. Going into March OPEX, trending higher, then we reversed lower. Going into April, we were trending lower, then reversed higher. And now we're going higher, and we're waiting to find out what the trend is going to be in May. So, I mean, the pattern has been to reverse or to go the opposite direction of the previous trend. So, in this case, the trend has been clearly positive, trending higher. And so, if the trend continues, one would expect then that the S&P and probably the NASDAQ reverse lower. And the other thing that's worth pointing out is, notice this pattern, this trend reversed on the second day. This pattern reversed on the second day, and here we are right now. We're on the second day, and we'll see if this continues the reversal. We did finish a little bit lower on the day, so we'll keep an eye on that. It looks like otherwise resistance is probably around this 59.70 area. And after that, you're talking about going back to around 6,100. When we look at the Dow, also a very similar look. Here's your 10-day exponential moving average. You're still trading well below the upper Bollinger Band, not nearly as overbought at just 63. Although I would say that the Dow is running into some resistance here at 42,670. So that's acting a little bit right now. After that, we're talking about returning to 43,800. But again, if there is a change in trend that it is developing here in the U.S. markets after OPEX, then this is pretty much on schedule. What I would say is that if we were to, there's a little bit of a trend line here you can see right along the 10-day exponential moving average. If this trend line breaks and you get below this 42,300 region, it's probably setting up also a return, filling of the gap at 41,400. Anyway, we'll see you next week. Bye.